Good evening, everyone, and Merry Christmas. It's December 24th, 2022. And welcome back to the channel. This is Liberty Pole Research. I just wanted to post our 2023 market forecast to the website and let you guys know a few of my thoughts. What I've done here is present a number of possible scenarios for the market to take this year. And I generated these based on W.D. Gann's techniques, which use cycles from historical market performance to project a forecast into the future, basically generating composites of these cycles. And for those of you not familiar, W.D. Gann was a truly brilliant trader from back in the 20s and 30s. And he was actually able to time the peak of the 1929 stock market bubble burst and subsequent downturn pretty well with these techniques. So I've learned a lot from him, and he's truly a brilliant guy, and you should really check out his work if you're not familiar with it already. So basically, this orange line here. This orange line here is what I'm thinking is the most likely scenario. However, we have these other models that they diverge from it slightly. They don't always agree. I guess there are a few different scenarios that the market could potentially take this year. But in general, this is how I plan on trading it. It looks like we have a pretty strong uptrend to start the year here. All the models are projecting that, and at least until the almost mid-January, I'd say looks like pretty strong uptrend. And then the orange line this one kind of diverges a little bit from the rest of the models. So I don't have really strong conviction in that. I guess we'll see what happens. I think January will be a really telling year. If January is a down year, it usually means the rest of the year is going to be a bear year. So I guess we'll have to see what the price action tells us mid-January, see what's going on. I mean, if we don't get this strong up move here, that would concern me about this model, and definitely bring me back to the drawing board. But what I plan on do is calibrating this model throughout the year, probably once a quarter. If we get, I'll talk about the first quarter in general. If we just zoom into the first quarter here, so obviously the orange model kind of deviates from the rest of them here. We'll have to keep an eye on that, but what I'm thinking right away, strong up move till around the 15th. And then after that, I would say take some chips off the table and maybe see what the price action tells you, because if we start heading down this way, obviously you don't want to get stuck in that. But if it starts going up this way, and maybe that's, I don't know, maybe the risk reward is there, and we'll take a look at the indicators and see what they say. But definitely around, what's this? I mean, if it does remain pretty bullish through February, then I'm going to be looking to, I'm probably going to be looking to sell late February, because I think we got around here, we're going to have a major low. I think that'll probably be the buying opportunity of the year there. Because if you go back to the yearly forecast, this right here, I mean, I know these, so typically these models are more directionally accurate than they are in magnitude. I saw this a lot in 2022, where in general, the market followed the trend. However, the the low might have been a lower low, like it did in October of this year, for example. I mean, my models were actually telling me there that October low was going to be a higher low, and turned out not to be the case. I think, if I'm not mistaken, the low in October was the low for the year. So that was a surprise to me based on the models. But yeah, I mean, what I'm saying here is that, you know, in general, you can follow, these will be more directionally accurate than they will be in magnitude. So just keep that in mind. But you know, what I'm seeing here is that we get a strong up move till mid January. Kind of a questionable period in here, and then a low late February or early March. And that'll be a great buying opportunity, because then I think you get a strong up move until around beginning of May, and then it kind of, we'll take a look at the indicators around here too. I'm sure you'll start seeing the momentum roll over, and that'll indicate that, you know, we have kind of an intermediate term top forming here, and then we're going to be seeing some more downside. So, you know, I think all of these models are projecting in August, early August, buying opportunity right here. You know, whether that's here, or here, I don't know. We'll see what happens. But after that, I think, you know, August, September, October, even into November. I mean, I think probably early November, you're gonna start seeing the market roll over again, and I wouldn't suspect we'd see a down move this strong in, I don't know, there's probably another low right before Thanksgiving. I don't think I'd be expecting something this drastic, but keep that in mind. All these models are projecting a low right before Thanksgiving, around there. And then I think it's, you know, pretty much up for the rest of the year. So that would be my way to trade it. I mean, that's what I'll be doing. Like I said, if we do get a down January, then all bets are off. I mean, if we start going this way, or if we go up a little bit and then curl over, that would call into question this entire forecast to me. So let's keep an eye on that, see what happens. Let's see what else I got here. What else I wanted to talk about. So, like I said, during the first quarter, I'll go ahead and calibrate this model. We might see that, you know, for example, we might see that the low is, you know, maybe a week before or a week after, and that might tell us that we might want to shift this model in time, you know, forward or backward. So we'll see what happens there. So another thing I'd like to point out is that, you know, this being a bullish year is completely contrary to the prevailing sentiment out there. I mean, you hear everybody on Twitter comparing this year to 2008 or something, like we're going to get some flash crash or some liquidity crisis, and I don't see that coming. I mean, it'll come. I mean, I think we got a few years until that happens, though. I'm a little concerned about the yield curve. You know, the inverted yield curve, that is indicating that something's coming. That's been pretty good at timing recessions, and we'll have to keep an eye on that too, because, you know, statistically, if you look back, the crash, you know, any sort of crash or strong down move doesn't really come into place until the yield curve uninverts and starts steepening. So that's another thing we'll have to keep our eye on. So another thing I've noticed is that the Dow has been outperforming the Nasdaq and S&P. That makes a lot of sense with the higher interest rates, and I think we'll continue to see that in the future. You know, being that the Dow is leading us out of this downturn, it definitely looks like the strongest market to me. Um, in other markets, I think the DXY tests its it tested. I think it'll test its high in probably early summer. Um, I think this will weigh heavily on commodities, but I think it's probably a great buying opportunity for gold early summer. You might see gold on sale June or July-ish, that time frame. I think oil would outperform natural gas. That's what I'm trading now. I'll post a separate video on that, how I'm trading that market. But I think oil outperforms natural gas at least in the first half of the year. Um, and I think it's also a strong market, a strong year for real estate. A lot of people think, real estate's going to crash due to the high interest rates. I don't see that coming for a few years. I think, supply and demand is pretty stable and in balance. And, in general, demand has dried up, but there's no inventory out there either. So, and everybody's got these low interest rates, these low interest rate 30-year mortgages that they've locked in. I mean, why would they sell? I don't plan on selling my house and then go getting a mortgage for 5%. I mean, that's crazy. So, I think contrary to what everyone thinks, I think real estate will actually be moderately up, maybe strongly up this year, depending on what happens. And finally, to wrap this up, let's talk about Bitcoin. I think we're seeing a great buying opportunity right here. I mean, playing this 4-year cycle. Bitcoin just got hammered this year, as I was expecting, and in general, I mean, it's pretty obvious that it follows this 4-year cycle pattern, and there's a top every 4 years. There's a peak, and then there's a year of downside. So you go up for 3 years, down for a year, up for 3 years, down for a year, up for 3 years, down for a year, and here we are. And you can see that down here on the price percent oscillator, which is my favorite indicator for momentum, on the weekly time frame, you'll see that every time the price percent oscillator has been at this level, that has marked pretty close to the bottom of each cycle. And so momentum is right on our side. It's curling up, and we're right in the timing band for a low of the cycle. And let's zoom in here. I was really kind of thinking we might come back down here and test this level, 13,874. So this was the level. This was the peak in 2019 here, and I was thinking that we would hit that level, we would test that, and then bounce right off of that. But being that we're so close to the end of the year here, I mean, 2022 is coming to a close, and I don't think, I mean, in every previous cycle, the down year has never lasted into the next calendar year. So I just don't see that happening. Now, if we do see further downside and lower lows next year in Bitcoin, like, in January, February, if we're heading down here, that would concern me a lot because, that would kind of invalidate this 4-year cycle, and that would be very concerning. So we'll keep an eye on that, and hopefully that doesn't. Okay, one indicator I wanted to cover is this Bitcoin production cost oscillator that we have on TradingView here. This is basically showing that, all these areas in the red. So this would indicate that it's actually more profitable to produce Bitcoin than it is to basically the cash flow is positive. So after the miners purchase, the electricity that they use to make the Bitcoin, they end up in profit. But down here you can see that it seems to indicate, maybe I'm not understanding this correctly, but someone can tell me in the comments if I'm wrong. But what this, I think, indicates is that it actually costs more in electricity to mine Bitcoin than you actually get by selling the Bitcoin. I think that's what that means. And as you can see, all the way back here, so, back here in 2020, 2019, as you can see, every time it's been in this green zone here, it's been a buying opportunity. You've seen like immense upside after following those time frames. So that's another thing I'm taking a look at. What I would be looking to do here, and I'm kind of just following this this arced line here. Let me just get this out of here so we can make this bigger. So what this tells me, is that what can we expect from here? Okay, so here we are, December 2022. I think we see a decently strong start next year. Maybe we have some more downside. I don't think lower lows than what we have here, but possibly this 13,874 number gets hit early in the year. I doubt it, but could happen. After that, okay, so let's say that happens. I think strong up move from there. And then I think we, do something like that, and then very strong up move around 2024, 2025, and then blow off top here, and then a year of downside. So that would tell me that around December 2025, exactly 3 years from now, you're probably looking at Bitcoin at around 150,000. That might sound ridiculous, but that's what the model predicts. So that'd be nice. Just full disclosure, I own some Bitcoin, okay, but I think it's a great. It's the best digital money out there. I don't believe in any of these other cryptocurrencies out there. I think they'll ultimately fail, but Bitcoin will still be with us. So that's my general outlook for 2023. Let me know what you guys think down in the comments, and we'll see you next year. And hopefully it's a strong January. I think it will be. So we'll keep an eye on it. Thanks for joining. Bye.